You sit at the screen. The monitor casts a blue glow against the wall. You draw a diagonal line connecting 3 wicks. You switch tabs to watch a video on moving averages. You feel a surge of absolute certainty. You believe you know exactly what the market will do next. You believe you have solved the puzzle. You believe you can predict the future. You cannot predict the future. The belief that you can is the most expensive illusion in retail finance. Prediction is a lie designed entirely to feed your ego. The machine on the other side of the trade does not predict. It verifies. It operates strictly on mathematical expectancy. You are trying to guess the outcome of a single coin toss. The machine is calculating the variance of 10 million coin tosses. You must eradicate the concept of prediction. You must replace it with system verification. Until you possess a verified baseline, you are simply donating liquidity. You must execute. Not 10 trades, not 20. You must log 100 consecutive executions in live market conditions. You do not touch the parameters. You let the stop-loss hit. You let the take-profit trigger. You ignore your gut. You ignore the panic. You endure the sequence of returns. At trade 100, the ego is dead. The mathematics remain. You look at the ledger. You extract your win rate. You define your average win. You calculate your average loss. You confront your maximum drawdown. Until you possess these 4 exact numbers, you are not trading. You do not have an edge. You are a gambler standing inside a perfectly optimized casino. The house trades mathematical reality. You are trading feelings, and the house will take every dollar you have. You verify the baseline. You think you are ready for scale. You open the exchange interface. You drag the leverage slider to 50x. You feel the intoxicating rush of borrowed power. The green candle surges. You calculate your imaginary profits. You are a genius. Then the wick reverses. The price drops out. The screen flashes red. The automated email hits your inbox. Liquidation. You feel the sickening, hollow drop in your stomach. The capital is gone. The exchange consumed it instantly. You are not trading. You are playing Russian roulette with a margin engine. You must strip away the fantasy of leverage. You must return to spot execution. The absolute ceiling of performance is not profit. It is survival. You must abandon the delusion of getting rich overnight and submit to the boring, ironclad law of risk architecture. The market breathes. You must measure that breath. You do not place a stop-loss based on how much money you are willing to lose. You place it based on volatility. You use the average true range. You identify the exact point where the structure of the market proves your thesis wrong. That is your distance to invalidation. Then you execute the only formula that matters. Your exact position size equals your total equity multiplied by your strict risk percentage divided by the percentage distance to that invalidation point. You do not risk 20% of your account on a feeling. You risk 3 to 7% on a mathematical certainty. When the stop-loss triggers, you do not feel panic. You feel nothing. The loss is a controlled burn. It inflicts minimal damage. You survive the variance so that compounding can occur uninterrupted. You stop trading to feel alive. You start trading to stay alive. You scan the screen. You find it. The perfect technical setup on a small-cap altcoin. The structure is pristine. The indicators align perfectly. The volume profile is flawless. You execute the buy order. You anticipate the breakout. The breakout never comes. The price stalls, then it bleeds. Support levels dissolve. The chart disintegrates. There is no technical reason for the collapse. You stare at the red candles, entirely confused. You were looking through a microscope while standing on a sinking ship. You ignored the macro regime. Your perfect chart is entirely subordinate to global liquidity. Capital flows in a strict, unforgiving hierarchy. Fiat to Bitcoin, Bitcoin to large caps to the fringe. You pull up Bitcoin dominance, it is surging. You look at global liquidity, it is contracting. When the macro tide recedes, the fringe assets are liquidated first. Your isolated altcoin setup was not an opportunity, it was a low probability trap. The machine was pulling capital back to the core, and you volunteered to be exit liquidity. You must implement a regime filter. You stop opening individual charts. You calibrate to the environment first. If Bitcoin dominance is trending up, you do not deploy capital into the fringe. If macro liquidity is draining, you reduce your frequency. You institute a hard rule. You absolutely forbid yourself from deploying capital against the macro tide. The market does not care about your pristine pattern when the structural flow is moving in the opposite direction. You kill the urge to force trades. You align with the macro regime. If the environment is toxic, you do not execute. You simply sit on your hands and wait.
You close the trade. The screen flashes green. The balance updates. You feel the immediate hit of dopamine. You sit back in your chair. You feel like a genius. You outsmarted the market. You made money. You believe the green number validates your skill. It does not. A profitable outcome is a dangerous illusion if the execution was flawed. You must open the ledger. You must strip away the emotion and confront the raw data. You pull up the chart hours after the close. You track the maximum favorable excursion, the absolute peak movement of the asset in your direction. The price did not stop when you sold. It ran another 15%. You did not take profit based on a structural target. You took profit because you were terrified of losing what you had. Your fear cost you the majority of the move. You paid a massive premium for emotional comfort. Then you look at the entry, maximum adverse excursion, the deepest drawdown you suffered while holding the open position. You survived the dip, but the asset only drew down 2% before the rally began. Your stop loss was set at 7%. You were risking 5% of excess useless heat. You gave the market room it did not mathematically require. You systematically eroded your expected value to feel safe. The ego dies. You realize that feeling good about a win is entirely irrelevant. The only thing that matters is optimizing the mathematical spread between your execution and the asset's actual behavior. If the data dictates a tighter stop, you tighten it. If the data proves you cut winners early, you force yourself to hold. You stop trading for dopamine. You trade to extract the absolute maximum yield from your edge. You watch the setup materialize. The macro regime is aligned. The invalidation point is defined. The position size is calculated. Every parameter of your verified system is met perfectly. Place your hand on the mouse. You hover over the execution button, and you freeze. You hesitate for exactly 3 seconds. You remember the liquidation from last week. You feel a phantom friction in your chest. By the time your finger clicks, the asset has surged. The entry is gone. Your risk-to-reward ratio is destroyed. You missed the mathematical edge. You have just discovered the final point of failure. It is not the exchange. It is not the system. It is you. You are the weakest link in your own architecture. The algorithm is perfect, but the biological hardware is flawed. Your mind is saturated with latency,
fear, and the memory of past losses. The machine executing against you does not remember its last trade. You do. That memory paralyzes you at the precise millisecond you were required to act. A theoretical edge is meaningless. You must achieve mechanical compliance. This requires violent psychological conditioning. You must sever the connection between observation and emotion. When the parameters are met, there is no decision to make. The decision was made weeks ago during system verification. The live market is not an environment for thinking. It is an environment for executing. You must train the hesitation out of your nervous system. Relentlessly, identifying the setup and pulling the trigger must become a single, fluid, automatic motion. You do not hope. You do not fear. You do not reconsider. The signal flashes, the order is sent. Zero emotion, complete compliance. Until you reach this state, you do not have a strategy. You have a wish. You sit in the dark. It is 3 a.m. The monitors project a harsh white light. Your eyes burn. Your heart rate is elevated. The market is bleeding and your cortisol is spiking. Your cognitive processing is actively degrading by the second. You panic. You reach for the mouse. You execute a manual override on a perfectly hedged position. The market bounces. You just destroyed a week of verified profits because your nervous system misfired. You blame the volatility. You are blaming the wrong variable. The failure was biological. You believe your trading machine is a liquid-cooled computer. It is not. The machine is your physiological substrate. You were participating in an elite cognitive performance sport, and you're treating your body like an afterthought. You cannot outthink physiological decay. You must build physiological capital. You leave the screen. You must condition the meat. You build explosive resilience through intense calisthenics, strict pull-ups, weighted push-ups. You force the muscle to adapt to physical failure so the mind does not snap during financial failure. You execute maximum effort sprints to violently reset a hijacked nervous system. Then you manage the baseline. The market is a continuous slow drip of toxic stress. You must metabolize it. You log hours of Zone 2 cardiovascular work, steady, relentless aerobic output. You expand your aerobic base to lower your resting heart rate. A lower heart rate means a wider gap between market stimulus and biological panic. You track your sleep metrics exactly like you track your portfolio drawdowns. If recovery is compromised, you do not deploy capital. Your edge does not exist in the chart. Your edge exists in the prefrontal cortex. If the biological substrate degrades, the algorithm dies. Your neurological clarity is strictly dictated by your physiological discipline.